Good afternoon, Scott Redler, T3 Live. Welcome to today's recap. So it seems like the market keeps holding where it has to. Ever since that November 16th low, we've had this methodical move to the upside. And every time it seems as though, dip buyers should come in and support what has been a pretty methodical move. Markets take it in stride. You go right here to the chart of the spiders and you will see here is where you had this red dog reversal, red dog RDR right here when it went below the 135.18, came back above, and then here's the first spot where the bull's metal got tested right there where it went below, closed on the highs, stayed in the groove. Then finally you had a little bit of a outside day after a big move from the lows. What happened here? 3 small down days, then we held in there again, and then after this small move after the Fed, right? Small move after the Fed, nice spot to sell some. You don't have to worry about the past 2 sessions or so. Then today, pow, nice wide range bar with some power engulfing the last 2. So all in all, this rally, remains in check, in stride, and moving quite well. If you recall, I came in today and I said the key to the market making more progress would be the banks. Oh, I haven't never talked about the banks in the past few months, I guess. Right. Anyway, you even had an additional ad. For those of you on the virtual trade floor, you've seen that I've been long Bank of America. I don't know, for compliance purposes, I'm not exactly sure how long, but for a while. And JP Morgan, at least since a week or so ago. And the Bank of America, we talked about putting it in the drawer. I think in August, I talked about an option strategy, at the 8s to get, full premium with the call spread. That worked. And then we had another, type strategy at $10. And, look at Bank of America. I want to give you a great example of a tier system here, guys. Here, tier 1, waiting for it to go, holding higher, the top end of this channel, getting ready to go through this $10 or so, okay? On the weekly chart, it looked even better. You could have been in tier 1 here, added for a few tiers through the 10. Then it had a nice move to about 1050. You could have said, okay, I'm getting back to tier 1. And then you had a nice methodical consolidation, okay, proving it could hold higher, holding the 8-day moving average. Then on the price point sheet, we talked about it. On Twitter, I think I talked about it. 1070 was the price. I added through 1070, sold some into 1085, some on the close around 11. I still have some. This is how you hold a stock from the 9s all the way to about 11 for what is about 20% or so, and you make cash flow based on using chart patterns. Add a tier here, take it off. Add a tier here, take it off, but then hold for a move. As far as JP Morgan, I think I've been sitting in this one since we talked about it getting a little bit better right around here to play some catch up, right? 41.50 or so. Came above it, gave you a move, held higher, and now it's breaking above a more macro area. So JP Morgan playing some catch up. This stock looks pretty good. You look at it right now, I think it's clearing some levels for what could be a move back to the highs of the year. So with that said, I know Goldman Sachs been choppy on the price point sheet. I talked about it at around 120. We talked about it on morning call. Lindsay said that Stephanie was, looking at it, buying some of it. Some guys got faked out right here on Fed Day, me included. I had a nice trade here, and then I'm like, let me get out of the way. And unfortunately, I didn't go back to it. I did not participate in this move in Goldman Sachs. I think Sperling was looking at it. There are a lot of guys looking at it. It was on the price point sheet. So if you caught this and it closed at the highs, you caught yourself a nice trade. Nice tight pattern, and it triggered. And look at it closing on the highs near the old prior highs. That's healthy for the markets. Morgan Stanley also finally participated, starting to act a little bit better. Here is your wake-up move right here. When it gapped up, we talk about if situations gap up and don't feel that they're powerful. Well, look at the participation here. Okay, look at this high-level flag continuation. Now it's up to you to trim some and trail some. Wells Fargo, I think, even participated. Look at that move. Finally, it should work its way back to that area. So, the banks help propel this move. The banks have been, our focus for a while. It's been where some money's been rotating. You take switch some gears back to tech. Google's been acting better. Amazon's been holding in really well. Those are the 2 higher quality, high beta names. If you guys remember Google, this was the buyable pattern for some swing traders right here when it crossed this downtrend, and then, it held higher. We talked about holding the 680 level, and although it's been pretty choppy, that day it gapped up and closed on the lows, could have been a sell signal, whatnot. All I know is it closed at 720, still making its way, and it just negated almost half of this wide range bar, taking away its power. So this type of work has been constructive. This is when We started looking at it. Here was your nice active trade. And then this is the problem here, guys. Sometimes you try and be cute like me. I got away from it, and then it put in somewhat of an outside day into 705, never went back to it. And now look at it at 720. So you might have thought you were a genius that you sold 700 or so, but then, if you didn't buy back into support and you wanted to own Google, you're probably like, oh, I missed it. And you probably did for now. But anyway, holding higher, acting better. Amazon, as far as daily chart, best in breed. Okay, look at this move from this descending channel down here. This stock showed relative strength, never broke the 200-day like some other high beta names we'll get into. And look at this, held higher. Yes, has this been a choppy mess within here? It has. But overall, you look at it, it's like a pretty methodical bull flag. Why not be choppy mess in here considering this the type of move that it had? So closing the highs today. Tomorrow we'll be watching it, 252. No, actually, sorry, 255 is going to be another level. It might try and clear, and that'll be the focus. And then, lo and behold, Apple. Apple, no one knew what to expect coming in today, right? Big move to the downside from 700 to 505. Then you had to bounce to 594. Then it came down real quick. And then the sentiment was getting so damn negative, and it just felt like it had to get to 480 or lower, and that's when things change. And for me, I had no idea. The Citigroup downgrade, it was at 496, 497 pre-market. I said, I'm going to be flexible here. I have no stress in Apple. It could go to 480, or it could, do a red dog reversal to 505.50. Let's monitor the action and measure it along the way. You look at Apple right now, just as a day one, here you go with a beautiful outside day. Look at that. Okay, why was 505 my pivot? Because this was the low right here, and this was the low from Friday. So 505.50 was that area that if we went below it and triggered and closed below it, it could have, the floor could have fallen out. It could have went to 486. It could have went to 440. It didn't. It reversed. It reversed, went back above 505.58. That's your red dog reversal strategy. If you didn't get it early enough or early, talked about it. It went on the virtual trade floor around 505.50. I did not have the VTF. I did not have Apple long, I think since Wednesday, even as a trade. So that's what, the virtual trade floor is there for, guys. It's there to give you some conviction to take more out of a trade. So if you come to me, the reason why you want to connect the dots from off the charts, the price point sheet, which also that pivot area was on the price point sheet as a short and a long, telling you be prepared for some type of red dog reversal if it develops. And then you see me, trading it, and then all of a sudden green pops up on the virtual trade floor, and it's there all day. Hopefully you're taking some nice movement out of that stock. Stock closed, I think, around 518 or 519. The price strategy for the red dog reversal, was 505.60 or somewhere around there. That's 14 points as an active trade. If you don't take stocks overnight, you clip it. If you look for day and a half moves or a potential swing move, you hold it. I held some. So you go back to the chart here, and you'll see, it doesn't look like much, but this is a nice strategy to make some money. And then you have a gap that gets filled all the way to, 525. So there's some extra room there. And you want to go to the 5-minute chart that I think Chart Girl tweeted when it was developing. Okay, we did it to try and get you guys in the loop. Okay, so let me show you something here. All right, first of all, you had a small downtrend coming into here from yesterday, from that Friday gap down. Here was the low, right? This was the low from Friday. So this is how it works, guys. I'll show you the mentality behind the red dog reversal. When something breaks, like first it rallied, when something breaks report, or support, you never know where it's going to go. It broke 505. It could have went to 500. It could have went to 480. It didn't. Guys tried getting short. I even tried shorting it a little bit this morning. And I actually, I don't know, I didn't really do well with it, but it was something different for me. And then once it stopped going down and popped back above 505, I said, I am getting long this. Let's see if we see some commitment. So right here, this was the fake out move. This trapped some guys who were looking for that extra short that might have been stubborn, that might still be short. I guess they have longer time frames. And the last guys who say, I'm going to give it to 505. I can't hold this anymore. I've been holding this thing since 660, or I've been holding it since 618, and I'm just out. And if that's you, you know what? If that was your rules, that was your rules. But a little late to the selling there. So anyway, here was your move up, and then it was pretty methodical, nice tight flag type pattern right here. Okay, so it popped above, showed some commitment. It was still green on the virtual trade floor, and then boom, nice push right up to this trend line, broke above, retested it, gave you a move to this 516 area, and then midday trickled lower. And what did it do? Held higher again. Okay, it didn't fall apart. They couldn't just sell it, and then at the end of the day, you had a nice move to close on the highs. So we'll see what happens tomorrow. If it opens down a little bit, maybe it's buyable for a trade through today's high tomorrow, which is about 519.16. If it opens up tomorrow, tries to fill a portion of this gap, you sell some and then you trail it and see if there's any kind of commitment. See if we get the same type of scenario where, you had your red dog reversal here and then you had a gap and go. We'll see tomorrow if there's any type of gap and go, but this is significant resistance, and we'll see, how the stock handles that, because again, this could be just one day, or it could, it could amount to a little bit more. At this point, you don't know. Nobody knows. So what I'm going to do is this type of pattern warrants me to take some overnight. It tells me that some pressure could be off the stock, and if tomorrow it opens up, goes negative, engulfs it, I'm out of the way, just like this last one. If you look at the chart here, here was a mini reversal that could have been a higher low to this reversal, and it just pretty much got engulfed and meant nothing. So we'll see what happens tomorrow, if this means something or if it's just a good trade. And then, some guys were talking about, what were they talking about today? A little bit of CRM, nice continuation, showing you there are some things to do. Here's a nice bull flag. I think this was off the charts, had a nice move. Then it went sideways, flagged, and continued again. I think VMW might have got a little love. All right, this one is a lower level trade, but I guess if people need some things to do, this could be on the radar as a lower tier trade, right? Through 95, perhaps it gets going, something to watch. I know X ignited on Friday, gave you a little bit of follow through, right? Opened up, was up by 2-3%. I trimmed some, but I'm going to hold some. Let's see if it could hold, go sideways, and then perhaps continue a little bit. So there are things across the board going on. So with that said, I'm going to close up. We talk about tactical, we talk about portfolio. Since that November 16th low, since Thanksgiving week, we've been taking a portfolio approach, trying to trade around with tiers, managing positions of anywhere from 3 to, I think at the most I had 9 positions throughout the course of this month time period, or like maybe 3 weeks. And then I just trade around a spider based on the range, and helps fund positions and also helps me sleep at night. And sometimes the market's conducive for that, and sometimes we're under pressure and it pays to be in cash and short and do little things for tactical cash flow. At this point, holding swing trades, adding positions around chart patterns for cash flow has been the prudent, profitable thing to do. And we'll see if that continues, and based on today's action, it seems like the market wants to continue in this current trend where it holds where it has to. Scott Redler, T3 Live, the recap. See you at the morning call. Have a great night.
Hi, I'm Sean Hendelman of T3 Live, where we train, coach, and mentor traders in order to help you put your money to work with confidence. The T3 Live approach is a blueprint for you to recognize, adapt, and ultimately take advantage of different market conditions. To begin your training with T3 Live, we would like to offer you the opportunity to enroll in our free 30-day online home study course. Fill in your name and email address, and I'll see you on the other side.